IFRS 16 leases, initial measurement of the lease liability in the books of the lessee. Class example 9 will now be used to bring all principles together with regards to the initial measurement of the lease liability in the books of the lessee. This example is expanding on class example 6 that we've looked at in a previous presentation. It's on 1 January 2016 where Rocco Limited entered into a lease agreement with Mimo to lease a new office building from Mimo Limited for a non-cancelable period of 20 years. The lease does not include any options to extend or terminate the lease, and ownership of the building does not transfer to Rocco at the end of the lease term. It is a contract or a lease per IFRS 16. The following information has been extracted. We have 1 January as my commencement date, X16. On 1 January X16, Mimo Limited, being the lessor, paid an amount of 15,000 Rand to Rocco Limited as an incentive to encourage Rocco Limited to enter into this lease agreement. On 1 January 2016, Rocco paid a deposit to Mimo Limited to secure the lease agreement. Rocco Limited also incurred 20,000 Rand legal fees relating to this contract and paid it to its legal advisors. Mimo, the lessor, agreed to partially reimburse Rocco Limited for these costs incurred and paid a total amount of 5,000 Rand to Rocco. Then the next paragraph dealt with the present value of this restoration costs that Rocco Limited estimated, and it was already included in a previous discussion. The lease payment applicable to this contract amounts to 200,000 Rand per month, which is payable annually in arrears by Rocco Limited. Of this amount, 25,000 Rand per month relates to maintenance services. Now remember to something we discussed before. That lease payment needs to be split between the pure lease component and a non-lease component. Maintenance services is usually a non-lease component. Rocco establishes that similar maintenance services are also provided by third parties at 25,000 Rand per month. That would now be your standalone price for those maintenance services. However, Rocco is unable to find an observable standalone rental for office buildings because there are no third parties that lease out similar office buildings providing the related maintenance services. So we have enough information to enable us to get to the pure lease component of that lease payment. There is also a residual value guarantee amount of R1 million that is payable together with the last payment by Rocco Limited. Rocco expects that the full amount of the residual value guarantee will be payable. This is just a different way of communicating what the amount payable under the residual value guarantee is. And that is again for purposes of determining your future value. The interest rate implicit in the lease is not readily determinable. So what do we do then? Then we need the incremental borrowing rate of the lessee, which is given as 12% per year. So let's use this given information to calculate the amount at which the lease liability will initially be measured by Rocco Limited. Have a look at the information provided above. All this information that was given up there was used for purposes of determining the initial measurement of the right of use asset. The rest of the information will now be used to determine the present value of the lease payments for measurement of the lease liability. To calculate the present value, we need the following variables. Your payment is again determined at the hand of the requirements of IFRS 16. It is the full 200,000 Rand per month, excluding the non-lease component for 12 months. That is your annual payment. N is your lease term. It's only the total non-cancelable period because there is no indication of extension options that the lessee might take. The I that you use, your interest rate, is the incremental borrowing rate of the lessee, because we do not have enough information, or all the information is not known to the lessee for purposes of calculating the interest rate implicit in the lease. The future value, remember, I'm busy calculating PV for measurement of the lease liability by the lessee. So the future value must be the amount payable by the lessee only. It cannot include any unguaranteed residual values. And that amount of $1 million was given. So the lease liability will be recognized at 15,789,498.